The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' music means it's time once again for the Option Block, your bi-weekly source of wit, wisdom, and indeed hilarity from the world of options. My name is Mark Longo from the OptionsInsider.com, as well as the old and yet ever-expanding Options Insider Radio Network. We have a new show coming online tomorrow, so stay tuned for that, listeners. And I am joined, as always, on the old all-star panel by our Thursday crew, starting off with the man from the mountains, a.k.a. St. Charles, Illinois, a.k.a. the town that Apple bought and also silver, none other than good old Uncle Mike Tusaw from Know Your Options, Inc. Uncle Mike, how are things going out in the mountains?
Going well. I'm just still in awe of just how wonderful of a party we had last week for the Options Insider. Just real exciting to be there and catch up with a lot of old friends. It was a lot of fun.
Yes, we wanted to give you a little taste of the magic that is the Options Insider. I'm glad you had fun there, sir. I'm glad you could have a few mojitos and not trash the bar like one Mr. Sebastian did.
Yeah, Mark, I think we're going to have to give me like an opening theme that's similar to Steve Austin with the sound of broken glass. 'Cause,
I will say, we talked about it on the Monday show. You weren't on here, but both Mike Kavanaugh and I both remarked at how we've never seen anyone actually break the same glass twice at a bar before. That was an impressive feat. I've never seen that before. So you had some dexterity within your mojito imbibing there.
Yeah, I was very proud of myself on that Thursday night. That was fun.
I think you decided it was still recognizable as a glass. You needed to do more work there.
You figured me out.
Listeners, we are also joined there by one Mark Sebastian from Option Pit. And now that you've recovered from your mojito-induced haze, how are things in the land of the pit, sir?
Things are great. Super happy to be here. I've heard enough of your voice for the day, but
yes, we have been chatting quite a bit. And listeners, if you don't know, we also recorded our Volatility View show today, one day early, and that's another time when Mark and I get to spend some quality time together. And if you haven't had a chance to check it out,
within your network,
you are becoming quite the fixture. The fixture is one word for it, I suppose you can call it. Annoying? No, I wouldn't say annoying. Not annoying, but what's the word I'm looking for?
The tinny voice.
Tinny, thank you.
Greasy
thank
meatball
you.
Sandwich.
The tinny voice of Mark Sebastian. A tinny fixture, I think, is probably the best way to describe it. But yes, you are indeed a regular on the old Options Insider Radio Net. We'll have to see about roping you into some of these new shows if we have time and if our listeners will allow it. But yeah, a lot of fun stuff going on the old radio network and indeed in the land of the Option Pit. And as I was saying earlier, if you haven't had a chance to check out Volatility Views before, I recommend heartily that you go check it out. Not only do you get more of Mark Sebastian, which how can you not have enough of Mark Sebastian? But also you get to hear some of his cohorts over at Option Pit, as well as the rest of us and the gang over at Volex pontificate at length about the world of volatility. And we've had some, dare I say, amazing guests on that show as well. It's been just a string of vol superstars and academics and interesting people to discuss volatility with. So if you're interested in volatility at all, in any way, shape, or size, then by all means, check out vol views either at theoptionsinsider.com or just type volatility views into iTunes and you will find it there.
Yeah, and I mean, honestly, if you think this is a good show, vol views is way better.
Well,
no, I'm just kidding.
We don't have Uncle Mike to begin with. So.
I want to go on VolView then.
VolViews is like this show, only with a heavy dose of academia brought on.
Yeah, that's what it is. This is very much more trading, and VolViews is much more academic, I would say. I think that's a big difference.
It's academic and also aimed at a very much a institutional high-end audience, and also high-end retail too, so I'm assuming a lot of our listeners here will be interested in that as well. And last, but certainly not least, another man who had quite the fun time at the Options Insider 5-year spectacular. We need to make it an annual event, I think, going forward. None other than Big Tim Navabi from Options Express. Mr. T-Nav, welcome back to the show, sir.
Hi, Mark. How are you?
I am doing very good. Thank you.
That's good. I didn't know we were talking options today. I thought this was NCAA bracket talk or something like that, right?
That time's coming up as well. We have a separate show for that where we talk about spreads throughout the various brackets. I remember guys on the floor used to come around all the time just selling baskets of all the quote-unquote teeny teams, the out-of-the-money teams, and just selling them in baskets and to anyone who would listen, and then they would collect their teenies. Needless to say, these are guys who made a lot of money selling out-of-the-money options and then promptly blew out. So they tried to apply that strategy to the NCAA with, I'd say, mixed results, because every year you have that one standout kind of surprise team that tends to throw off the rest of them. So those basket guys, I don't think fared too well over the long term, but an interesting strategy nonetheless. When I first got on the floor, I used to try to defy the odds by buying some of those baskets. Didn't work out that great for me either, so it was kind of a mixed trade all around. All right, with the team assembled, we are going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss what's moving the markets, what's trading, what's causing all the hubbub on the street today. And it was a day of slight to mild hubbub, I suppose you can call it, with most of the major indices up about 1%. S&P closed at 1365. The Dow closed at 12,908. The NASDAQ closed at 2970. And the good old VIX cash closed at 17.95, down about 6% on the day. So maybe we'll start there, as we like to here on this show, looking at VIX. And in the land of volatility, it's been a bit of an interesting time to be watching the VIX and, of course, all of the ancillary products that exist in that VIX world. The old VIX cash has had a bit of an interesting couple of weeks. I know we talked about it a lot over the past few shows here about what's going on out there, how to position in VIX, whether or not this index is kind of just poised for a little timeout period, a little breather. And I think it was your compatriot Andrew, Mark, on the last show who said that, made an interesting point that VIX is kind of hovering right there, where no one's scrambling to hit bids, no one's scrambling to lift offers. It's kind of just stagnant while everyone's waiting for the next development. Of course, we have the ongoing Greek brouhaha, which is kind of coming down to the wire yet again. It seems like
it looks like that. Right now the Greeks are saying that they're over. They're at 85%. So if they hit that 90 number, if they ended up hitting that 90 number, they had more than 75%. If they end up getting anywhere near that 90 number, this thing will blow up. But we'll have some CDSs enacted, it looks like, because it won't be over. I don't think they'll get the full 90%. But the fact that this deal is definitely going through, my game plan for the week was we needed to go 3 for 3. We needed ADP to match up. We needed the Greeks to get their stuff together, and we need tomorrow the non-farms to really line up well too. And I have a lot of trouble seeing non-farms not act the way we would expect. Especially on the private side. Governments fire people. Hey, more power to you. But that would be
spoken like a true libertarian, sir.
Yeah. Hey, what about this SBO? I was reading the SBO executive put on leave amid SEC probe.
Yeah, it's an interesting.
Just got launched.
Interesting tidbit coming out of the SBO. Our boys over at the Wall Street Journal rounding that one up.
That just popped out.
Yeah, that's Jacob, our buddy over at he's the Chicago branch of Dow Jones, actually, and we've been kind of talking a lot about this story over the past few days, he and I, just about what's been going on, and it's amazing before he finally filed it today, and it's been interesting to see really all of the rumors that he's been digging up about why this guy actually would be put on leave. And, I don't want to derail the VIX talk too much, but it's interesting. This notice of this investigation by the SEC was announced by the SBO a while ago, at least a week ago, and yet the stock has shrugged it off completely. No one's. I kind of did a little bit of digging when I had some time today. The stock's held strong. It pretty much, the investigation was announced, and the stock was around 21.5. It's trading around 27.5 today. There was no one really out there loading up in downside puts or anything like that. I think a lot of people didn't.
Here's how we circle back to VIX. Look at the VIX volumes that are going off in the futures right now, and you tell me how the stock can't rally.
Yeah, they're setting open interest records across the board there.
Crazy open interest records. That product is exploding and is now it's trading 200,000 contracts a day. 3 months ago, it was trading 50,000 contracts a day. You do the math.
Yeah, I hear you on a purely empirical level, yet there is this big unknown now in the form of this SEC investigation, which what we're hearing and what they're digging up here, looks like in the journal, is that it's a little deeper than people may have thought originally with their senior compliance guy essentially being put on leave. That's never a good sign.
It'll be interesting. Yeah, I'll say is, I think that SBO in general, I think that they've got good people working there. Mr. Fay's a nice guy. Patrick Fay, I believe I've met him a couple of times. Nice guy. I don't know what he could possibly do with wrongdoing. My guess, it has something to do with the flash crash, and it has more to do with CBSX than CBOE would be my bet.
Yeah, it seems to be linked to CBSX. That seems to be the rub here. Is that something to do with the listings on CBSX and whether or not the folks in charge over there at running that CBSX were looking as deeply into the names that they were listing and the firms that they were listing on that exchange as perhaps they should have. And, in the wake of MF Global and everything else, everyone and their mother is cracking down everywhere they possibly can. So this is perhaps yet another.
But to bring things back to VIX,
please do, sir.
To bring things back to VIX, the volumes are going through the roof, and we're finally seeing a small uptick in realized volatility. It's now 10-day is now over 10, 20-day not quite there, and 30-day is closer to 9.5 as well. But we're finally seeing that meeting in the middle. So I think we're going to see a VIX close 1795 today. I think we're going to see VIX into the 16s, and I'm going to be comfortable there in between 15 and 18 for the next couple months. And or at least for the next few weeks, and with realized volatility in between 10 and 12.
I think the really interesting story these days in the VIX world these days is at least the plethora of products that are swirling around VIX in this VIX universe. We've talked about TVIX in the past, and perhaps it's time to give our listeners an update on that too, because that's been an ongoing drama. We hit on Involve Use. By all means, we can dive on it here as well as some of these other products that are floating around in the VIX ecosystem, like VIXY and a few others, and kind of just the interesting activity we've been seeing in these. Of course, TVIX obviously decoupling. They're starting to couple back again. The whether or not it's dubious activity, all the fun stuff that has been going on in the land of the VIX surrogates, I suppose you can call them, for lack of a better word. So maybe we'll start there with the TVIX stuff, and let's give our listeners a quick rundown.
They came out with the UVXY, which is a TVIX surrogate, and it's been out for a while, but it finally started getting some trading because TVIX was so crazy hard to borrow. So, and now we're seeing some real volume in UVXY. So I think that has alleviated some of the issues with TVIX. And on top of that vol shakeout on Tuesday actually caused that whole complex to kind of loosen up a little bit. And so with that whole combination, I think that we're in, we should be in much better shape as to that whole TVIX, VIX, XIV type of thing. And it's definitely, we're seeing VXX act the way it's supposed to act. And TVIX is no longer trading at the same huge premium to assets under management, although I believe it is still trading at a premium. UVXY is relieving some of that. TVIX is still extremely hard to borrow. An interesting hard to borrow play would be to kind of short TVIX and buy UVXY against each other as kind of an interesting little play. You'd have to dollar weight it, obviously. But no, I mean, VIX futures are still, we're still with this blow up in TVIX, VXX. If people are wondering why there's such crazy contango, you can look directly at the ETNs. There's so much pressure of firms selling front month and rolling back to back month that it is creating a massive futures contango between front month and second month. Now, how would you trade at? Well, an interesting trade, if you're looking at it, would be look at the spread between March, April, and May. An interesting spread would be a April-May time spread in the futures. If you see how that spread has reacted because of ETFs and ETNs, then I think that we're going to be seeing something similar happen between April and May. So that might be a really interesting futures play for traders out there.
And then, of course, if you want to play the futures, is also the VIXY that a lot of people are loving.
VIXY and VXX are actually, to my understanding, are essentially the same trade. Things about those, they're great short-term plays on volatility. I would never hold a long position for more than 3 or 4 days in VXX or VIXY while the market was in this kind of heavy contango. Because every day, for instance, VXX is losing about 20 cents simply from roll yield. VIXY has similar issues. So you have to be really aware of these ETNs. They can be great ways to take a short-term flyer on volatility. They can be super dangerous to hold. I would never, and I mean never, go be selling a lot of puts in VIXY or in VXX. If you're looking to get short volatility, or if you're looking to get long volatility via put spread, then do things like selling VIX and VIX futures. Pick a month. Right now, I would go with March before I would go with April. That's the way to trade these type of things. I would not be looking in these ETNs because they're just so dangerous with the roll yield.
It's an interesting point you bring up, the roll too. So many people dive into these products and are not really cognizant of what's going on in the underlying and how this process works. I mean, I cut my teeth on rolls back in the SPX pit, and you learn the hard way really quickly if you ignore the roll risk and what goes on with rolls. And of course, we're talking about these products that are essentially cash index products, but they expire to futures on the quarterlies. So you have all these issues with rolls. And you see a lot of that coming up in these ETFs and ETNs based around things like the VIX and the S as well. And it's definitely something, if you're going to trade these products, you need to be cognizant of what's going on. And you're right, if you're just using some external proxy to do that for you, then essentially you're never really maximizing your roll conditions in there. You're probably going to be surrendering some or sometimes a good portion of your returns to what's lost in that flow, in that churn in between the products. Like right now, you're saying with the VIXY and the contango, you see that a lot in these products that are listed off of these ones that have a significant roll risk to them. So if you're going to be trading these products, that's the first thing you need to be cognizant of.
Very aware of what you're trading, and these products are dangerous. If you don't know what you're doing.
It might be worth, I think, someday down the road on this show, sitting down maybe a strategy block or one of those others and really going through roles and what we mean by roles and what we're talking about.
Yeah, I would be happy to do that.
I think SPX and obviously the futures options on the CME are a great place to start with that, because that's where a lot of people are coming in and have initially encountered the risk of rolls and what happens if you don't accommodate for that. And so we can let's move on to our other favorite topic on this show, and we'll save the rolls, I think, for a future episode. And good old Uncle Mike, we can't let a trading block go by, particularly given what's happened this past week, without discussing the other big elephant in the room aside from VIX, which is, of course, Apple. And I was joking with our friends over on our other show this morning about they're listing a NASDAQ product pretty soon. And I was teasing them they should really just call the NASDAQ product Apple Plus, because you get Apple and all the other extraneous garbage that goes into that index as well, just given the love for everything Apple these days. And first off, Uncle Mike, what was your reaction to not only the new iPad, but the market's reaction to the new iPad? And has this caused you to readjust at all? Or are you still pretty much short the 560s, long the 4.5 puts, and long the underlying, and letting the dice fly high?
Letting the dice fly high. I mean, that's one that it's weird when you think about it. 450 seems like a long ways away, but there's plenty of stocks that we have that are around the $50 level, where 45.55 on the collar is a standard collar. We work it, we adjust it, and it's worked well for us. It's just weird with Apple in that it's $100 away just because it's such a higher priced stock. So it feels like we're a long way away with those puts, but in reality, if we were to start going down, we'd probably just roll the calls down. Thankfully, we didn't this last pullback, but yeah, for the most part, we're just sticking to it, and until we touch 560, I'm just gonna let it sit to the upside. That is assuming we do go up to 560.
Yeah, assuming that's a big leap in Apple these days, where it gaps up 10 handles a day. Of course, Apple up 11, almost 11 and a half handles today to 542 roughly on the day, gaining back some of that, some of the love that it lost yesterday. I particularly. It's a nice upgrade, the new iPad. It's got pretty much everything everyone expected. I'm constantly amazed at the ability for Apple to roll out fantastic products that have a few glaring and obvious flaws, that it was where the obvious replacement is going to come in to fix those glaring and obvious flaws. And yet there's an entire cottage industry that has sprung up around guessing what the next iPad will feature. Like there was any mystery.
Called the new iPad. I look at that thing and I wonder what is the big advantage of that over the regular iPad? And it makes me wonder. I'll give them credit on the 4S. The Siri thing's kind of cool. But again, I don't know why if you had a 4, you'd go out and buy a 4S. I don't know why if you had an iPad 2, you'd go out and buy an iPad, a new iPad.
I heard that this new iPad actually knows what sites you want to surf. Before you
read your mind before you start surfing.
Yeah. Mm-hmm.
So it has all of your porn sites preloaded.
Those weren't the sites that I was thinking of, but
No,
he's an engaged man.
Yeah, I forgot about that. He also has his bird watching club that he likes to watch. He's got his botany association. That's another big one. And of course, the 100 Lot Slingers of Chicago is his other.
But yes, interesting stuff. But yeah, I particularly wasn't enthused. It seemed like the market wasn't particularly enthused. I mean, we do need to pick up some more iPads for our team here, so I'm kind of debating whether to go with the new one or just get the same one we have now, the iPad 2, because it pretty much does everything we need it to do.
I would do and save yourself some cash.
Yeah, exactly. So that's probably the way I would probably go. I think a lot of people are making that same determination, which is probably why the stock took a wee bit of a hit yesterday. Of course, it gained it back and more today. So you can't count out the Apple zealots who are saying this is going to be the first company to $1 trillion. That's the new narrative now for Apple. First to $1 trillion. We'll see if the zealots can be proven right or not. I haven't been keeping an eye on Apple Vol. I'd imagine it's been a steadily staying steady a little bit of late, just because it has been vacillating quite a bit. Obviously, a lot of that has been to the upside, so you had one directional movement in the underlying for quite a while. And of course, we had the big announcement yesterday, which some of it might have come off given that and the upward move today. But overall, I'd imagine Apple Vol has been holding steady up over the last couple of weeks or so, Mr. Sebastian. Have you been watching Apple Vol of late?
Yeah, you know what? The scoop of the century was after earnings.
Yeah, we missed that scoop. That scoop's already gone.
Over and over again, we talked about that on this show. People had listened to the show and acted on the fact that Mark and I were pointing out how cheap Apple Vol was and bought straddles. They would be very, very, very wealthy. Just a point.
I should bring up that you and I do bash Apple quite a bit, but we are not afraid to point out the obvious buying opportunities that exist in there, usually from a volatility perspective more than scooping the underlying perspective, but still.
Yeah, and The vol got really, really, really frothy ahead of this event. It's starting to come in. I think it's probably going to ease down to about 26%, 25% in, and that's probably where it's going to settle. I think people learned the lesson about selling Apple vol down to 1830. That's just my guess.
Yeah, that chasing the bid in any way, shape, or form you can to hit it to sell off that short premium in Apple these days.
Right. So I'm thinking, might take it down to, we might see it taken down to about 25%. There's definitely some pressure there on the premium now. So that's kind of what I'm looking at.
We'll have to keep an eye on Apple going into tomorrow because I know Mr. Grigas is short some upside here. I believe it's in the weekly, so he's only got a little bit of time left, but we have to watch out for the Apple upside explosion that could leave Mr. Grigas reeling. He's a brave man, braver man than I to sell upside in Apple at this point.
He's never been a short the man doesn't like.
Yes, that's true. That's true. And speaking of Mr. Grigas over at OX, Mr. T-Knob holding down the OX seat today. What was catching your eye in the markets? What were people lighting up your phones with?
Yeah, good. That's interesting. One thing I just wanted to mention here real quick that you were talking about those the VXX products, and the roles and things. And one thing that I see a lot of on a daily basis is they don't necessarily know the leverage of they don't know the dangers about the leveraged ETFs.
Yes, definitely. I mean, that's what we were just talking about before with
all the time.
A lot of these VIX products that are leveraged 2x, 3x, and how that comes into play and how that actually works. People just assume that they get that automatic 2x, 3x. They never actually look into how these products are structured.
Yeah. So, in addition to like the future role risk, that you were talking about, there's also the leverage role. So, today, it's interesting. I mean, we had a lot of people trading Apple, believe it or not. Other things that people were trading were, McDonald's. People were trading LinkedIn. It's an interesting environment, I would say these days. I mean, people aren't really sure, what direction to take, sort of, for the midterm, long term. So it's things change. Market heads down in one direction. All of a sudden, you get people calling up, just looking to load on these puts. It's a very interesting time. In addition to that, people are also trading, crude oil. That's definitely piqued a lot of people's interest. Gold, and as far as commodities, that's pretty much where they're at. Gold and oil.
I'm growing more and more convinced we need to have the Great Roll Spectacular. We'll come up with that one of these. Yeah. One of these days, we'll sit down and just do a show about nothing but rolls, which I'm sure will scintillate and captivate our audience. But it's stuff they need to learn, so I think it's worth discussing in greater detail on an upcoming show. And with that, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that kind of sneaky music means it's time for the odd block. I don't know if we have any downright questionable activity going on today, but we have some interesting and or unusual activity. We're going to kick it off with good old SBUX, Starbucks Corp. I love my old Starbucks. Not exactly a big fan of the coffee, but that was in one of my first pit over at the CBOE was IBM, and the other big name out there was good old Starbucks. So I am quite familiar with Starbucks and its intricacies and vagaries. And what we're seeing here in good old SBUX are people flocking in to scoop up good old SBUX ahead of an announcement of a conference call today, actually, to discuss a new initiative in the single cup serving category. So there you go. That's market moving news right now. And actually, it looks like the stock is up a wee bit on this news. Our Starbucks closed today at $50.37. In the after hours, is trading up about $1, trading about $51.35 at 51.5. So it looks like people are liking whatever they said about their single cup serving category. It also looks like these bulls who were loading up on calls today in good old SBUX were on the right end of the train here. We saw a lot of bulls flocking in to gobble up calls on the 52 half strike across the board. We saw 3,800 of the March 52 halves going up today, a total of 4,500 on the day. The bulk of these calls were purchases in and around the 12-cent range or so. We also saw people rolling out to April and May, picking up longer-term bullish positions, where people buying up July 52 halves as well for 65 cents and $1.90 a piece. On the Aprils, we saw about nearly 7,000 of those going up today, and on the July is about 2,000, the bulk of both of those being purchases. So a lot of bulls flocking out to SBUX today. Of course, if you've been watching Starbucks for a while, this is pretty much the highest level it's reached since its IPO. It's up about, it was yesterday's, a few days ago's close was the highest to date, $50.75. We're trading much higher than that in the after hours right now. So apparently a lot of people thinking that the future is bright for good old SBUX. Any of you guys out there, Mark, Mike, or Tim, you guys, aside from drinking heavily of the Starbucks coffee, you guys watch this name at all?
I hate Starbucks.
You hate the stock?
We actually put a trade on this and got out of it today in Starbucks.
What were you trading?
I'd noticed that the volatility hit a 52-week low. Stock was touching a 52-week high. So we went out and bought some of the 49 calls at thestreet.com, and that worked out really well. I love the combination of near 52-week high and touching 52-week lows. Almost always bouncing. Anytime a stock has bounced off a 52-week high and vols in the toilet, it's usually going higher. That's been a great opportunity to scoop calls. So
certainly seems like that was the case today in SBUX. Too bad you couldn't.
It's pretty active here at Options Express, actually.
Oh, yeah? A lot of calls?
Lots of calls.
And Mr. Sebastian, we also have some interesting news coming out of DHI that I know you've been watching quite a bit today. So why don't you enlighten our listeners about that one?
What's the firm? Stanford, I believe, is the name of the firm. It's a newsletter recommendation firm.
Okay.
They put out something saying to buy the DHI April 14 puts and pay some phenomenal amount. And so if you look at how DHI traded, and we'll be talking about this on my blog today, there was almost no volume in the whole thing, and then 78,000 puts traded on the 14 strike. Yeah. And it was all
I'm looking at it right now. Yeah, 78,000 of the April 14 puts.
Following some moron blindly that probably doesn't know how to trade. Yeah, it was let's see. It was Stansbury put out a put recommendation, and 78,000 people bought, or 78,000 puts were bought. The market makers ran up the vol, bought all the strikes around it, and then collapsed it. So these people are all out money already.
You have to love those kind of. When you're a market maker, those things were just manna from heaven. Those recommendations were the lemmings. 78,000. This is the name that does maybe 5,000 contracts a day. They did 15x that on one strike today. That's absurd. And all of it, like I said, when you see this kind of one-sided, absurd lemming paper coming in, there are so many ways to position to make money off this that it's ridiculous. I mean, you can come in and just wait for the herds to come in, let them bid it up out of control, sell it. You can sell strikes around it. You can buy strikes around it and sell the strike they're buying. There are numerous ways to get in and out of that and lock in a lot of profit. We used to see it's going up in SPX all the time, and they were just fantastic. Once you start seeing these lots come rolling in, the rest of the day held in store for you, and you can just position off of that all day long. And that sounds like what the market makers were doing. I'm surprised there's so few spread off in the strikes around it. It's 78,000 of the April 14 puts, and then less than 2,000 of the 13 puts, and only 500 of the 15s. So unless they were spreading somewhere else, they were really just
or something like that, maybe. Who knows?
Yeah, I mean, but it's interesting.
KPH.
7,000 of the May 14s. A lot of people were legging into that time spread. It looks like. about 7,000 times there. But that interesting paper. It's funny. I always get D.R. Horton confused with Tim Hortons whenever I hear him. I think, wait a minute, donuts? Oh, wait, no, they build houses. It's one of those names, Canadian donuts and or houses. Exactly. But yeah, that certainly is qualifies as interesting and or unusual. I think we'll wrap it up here with just a quick hit on Carnival today. Carnival, if you've been watching, Carnival, let's pull up the old ticker symbol for that first. We can see where it closed today. Good old Carnival ticker symbol CCL closed at $30.95, up about 1.5% on the day today. This is a name that does about 7,000 contracts a day. They did nearly 30,000 today. Similar story to SBUX in that they have their earnings coming up before the open tomorrow, and everyone and their mother is piling in, thinking that some good days are still ahead of Carnival. If you've been watching the cruise line industry at all, Carnival was sailing, no pun intended, off to a good start of the year, and then that crash or that sinking of that cruise ship in Italy just crushed the entire cruise sector, including Carnival. Carnival shares dropped to a 6-month low in the days immediately following that disaster. The stock's back up a little bit, but it's still down about 12% net since that disaster. And it seems like a lot of options traders are thinking that is extremely overdone, given the fundamentals of good old CCL. We saw people flocking in to scoop up March 33s, which are significantly upside given the fact that these are very near-term options at this point, gobbling up 4,000 of them for about 35 cents a piece. We also saw April 34s even more bullish, about nearly 4,000 of those going up against open interest of just 1,400 contracts. Those were a little more mixed to mid-market activity, so they weren't all buys, but at least roughly half of those or so were being purchased for around 37 cents each, so maybe some people were spreading off the March against the April there. But net, it was a substantial amount of bullish flow coming into this name that only trades about 7,000 contracts a day, and it did pretty much that money just upside and near upside calls today before the close. Of course, earnings coming out before the open tomorrow here on CCL. So we'll keep an eye on these and see if good old CCL can make back its mojo. It got up to about 35, over 35 actually earlier this year before that Italian cruise ship disaster really just cut the legs out from this stock. And we'll see if the earnings can turn that one around here. And that is going to do it for the old odd block today. And now we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is the portion of the show where the boys from OX hold court, and I get to relax my vocal cords. And today we have some interesting topics on the old docket from Mr. T-Nav, a.k.a. Big Tim Navabi from the trading desk over at Options Express. And as we touched on in the trading block, a lot of interesting things to discuss. We'll have to get into those roles at some point, not today. Obviously, we don't have time to get into it today, but there's a lot of things to touch on that are similar topics, including listening to your broker and working with him when you're calling frantically to scramble and get out of your positions. How many of your calls on a given day would you say fall into that ilk, Tim, where there are people scrambling to get into and out of something in the either on the open or right before the close of a given day?
Well, it doesn't happen that often, which is, I think, why it's important to be aware that when it does happen, sort of, how to avoid the situation, and, there was for example, like I was mentioning there, on a Friday afternoon, a customer may call up and say, I have several accounts and I have all of these Apple butterflies and I need to get out of them and I need a broker to override some of these trades, because it for one reason or another. That's not an easy call for the broker or for the customer. And, I kind of wanted to talk today about, really just sort of, working with your broker. Your broker's on your side. If your broker's not filling your orders, he's not making commissions, then, he's not really making any money. I mean, then he's not really going to be around much longer. So, really the broker is always on your side. I mean, the broker wants to help you get what you want done. And, calling up, on a Friday afternoon, late in the day, 10 minutes before the close, saying, I got all these accounts, I have to get out of these spreads, and then just kind of resisting to work with the broker, or getting upset of how the broker's sort of trying to handle the call and make sure that everything gets taken care of, because then, there's also the risk group as well that's looking at this position saying, we're going to start taking them out ourselves. So,
I think that's worth just bringing up that little point you mentioned right there about the broker doesn't get paid unless you get filled. I think a lot of people tend to forget that. The number one complaint we hear from all the brokers we work with and from our users and our listeners and our audience and our readers who interact with those brokers is, why didn't I get filled on X? As if there's some sort of massive conspiracy against them being filled. They think the broker is somehow working at odds with them, when they tend to forget that unless they get filled, the broker gets nothing. So the broker is your ally in those respects. So certainly, I hope keep that in mind when you're calling Tim at 2:55 to get out of your Apple flies, and keep that in mind, definitely.
Yeah, I mean, just to kind of touch up, yes, I don't mean to sound like a smart aleck. I do say it often, same response. How come I'm not getting filled? And I'll say, if you don't get filled, we're not charging you a commission, which means we're really not making any money. So really, believe me, we really want to get that order filled, and I think sometimes, people just don't understand that, or they miss it.
Now, you mentioned the broker override. Maybe we should hit on that a little bit, because I'm sure that's kind of a vague and opaque topic for a lot of our listeners. When someone just calls in and demands a broker override, what is the process that goes into that, and how much leeway do you have on the trading desk to override some of these things to get these things done?
It could happen for a number of different reasons, and I mean, I could take a long time talking about it. But in the sort of the instance where I was talking about, especially like on a Friday afternoon where you have these butterflies. Essentially, what you have is you probably have one leg that's totally worth zero, so you really now only need to get out of the two or the three, with one of them that's going to be expiring in just a few minutes. So really, the system may not allow you just to get out of the two or the three legs, because you may now have, what it thinks as, unlimited risk on that third leg, when we know, hey, this thing is at zero, it's got a very small chance of going into the money. So that's, that would require a broker override.
All right, listeners. So if your long options are trading a penny, don't call Tim and try to override them for a nickel. But if you have, that's a good example. If you have worthless legs of a multi-leg spread and you need to trade them or close out just a portion of the spread, that sounds like a good scenario where Tim can use his considerable influence to your advantage.
That type of override is very common. It does. Kind of throw customers, they're not really that prepared for that, one specific instance, whether it's a multi-leg trade and just one of them's at zero and they only need to get out of one, because many times they'll try to get out of both, but one's at zero and all of a sudden, they're saying, I'm not getting filled on my market order. Well, one leg is at zero and no one really wants it, so the trade's not getting done at all.
All right, thank you for that, Mr. T-Nav, and that is going to do it for the old Xpress Block today. Good points to bring up. Always work with your broker, and don't demand crazy overrides unless the situation warrants it, and don't call Tim at 2:59 p.m. on a Friday and expect him to work miracles. Call him at 4 a.m. That's when he works his best miracles. And I'm sure your wife-to-be appreciates those phone calls as well.
Uh-huh. Yeah.
All right, and that is going to do it for the Xpress Block. And please don't call Tim, because I'll hear about it. All right, that is going to do it for the old Xpress Block. And now we're going to dive straight into Around the Block.
Around the Block.
All right, welcome to Around the Block. This is the portion of the show where we talk about what's coming up on our personal horizons for the next few sessions. And, of course, the big one tomorrow is non-farm. That's the one everyone will be watching. Of course, we also have Carnival Cruise Line's earnings before the open. Mr. Sebastian, what are you watching tomorrow aside from non-farms and the great contagion that is the Euro disaster of 2011 or 2012, or the Greek contagion, as we say?
Not much, to be honest. I think that we're heading for we've got a lot going on. But these two humps, really what I'm going to be watching is where does SPX fall? Where does SPX IV fall on a rally tomorrow? If it ends up below where we were a couple of weeks ago, I think we're going to rally. If not, then who knows? So that's going to be one major thing that I'm watching. So that's about it.
All right. Thank you for that. All right. And Uncle Mike Tusaw of the Mountains fame, what is on your horizon? Obviously, you're also watching non-farms. You're also giddy with joy at the news coming out of Apple and the continued upside on that name. But aside from counting your Apple dollars and lighting your cigars with 20s, what else is going on over in KYO that is keeping you up at night, sir?
Well, I don't know. I'd have to be a lot wealthier before I ever lit a cigar with a $20 bill. I guess I'd have to be a lot wealthier before I even smoked a cigar, actually. But that's another story. Right now we're at a point where what Sebastian was saying, we have non-farm tomorrow. Definitely watching that. And if Greece does for some reason pop out 90%, and I think that would be a little bit on the high end. I don't quite see that happening, but who knows if they could. This could be a unique rally that we have. I mean, we've been going straight up in SPX ever since the 1200 mark back in mid-December. And you got to think that something's got to give and something's got to pull back at some point. But maybe 2 days ago, or it was our pullback. I don't know. Typically, I'm not a fan of leaving the covered call or not being in a covered call. I like having the time decay on my side. I feel much more comfortable rolling up calls and having clients curse me for having the covered call in place as I'm rolling them up and as the account value is going up. But for right now, I'm actually leaving the upside open, at least until probably day's end tomorrow, and then I'll probably start putting on some more covered calls again. I'm definitely not going to try. I'm trying my best not to fight this bull if I can at all help it.
Yeah, Mike, Federal Holiday Mike, a.k.a. Monday Mike, was talking about that on the Monday show about how the clients are starting to call up, and just it's been the good fortune of you guys to have so much upward movement in your underlyings that they're starting to lament the use of hedges, even though once these things turn to the dark side, they're going to be calling you, thanking you for the hedges. So it's kind of a thankless position on your end.
You do what you got to do.
But you know what? I'm sure those clients are ameliorated by all the scabs and hordes of dollars coming in their way, either from the S&P or from the Apple moving to the upside continuously.
Yeah, it's definitely been good. That's for sure.
If you're not lighting your cigars with 20s, I'm sure one or two of your clients are. Let's just say that. So listeners, if you want to light your cigars with 20s too, then call Uncle Mike and let him work his magic for you.
Oh man, you're gonna get me arrested for that one.
I said it, not you, so therefore you can hold me accountable. And last but not least, certainly we have Mr. Big Tim Navabi down at the OX desk. Aside from working your adjustment magic at the final minutes of the close on Apple Butterflies, what else is catching your eye, sir?
Well, yeah, I mean, definitely, non-farm tomorrow as far as news goes. Next week, I think there's also some good news events out there as well. Not that the Fed is going to come out and say that they're hiking rates on their, decision that's on the 13th. Yeah. But, I think we'll just get some sort of news and ideas and get more transparency, their word on kind of what they're thinking. As far as markets are concerned, it was kind of interesting the other day that, gold was down. Gold seemed to take a kind of took a big drop, as the equity market was dropping. So it is pretty interesting. I mean, Mike, that, the market's done nothing but sort of march straight up, but it seems like that correction crowd is also is a little big. A lot of people on that bus. So, I mean, it's interesting. You have a lot of people just kind of waiting to pounce on any kind of drop in the markets. And, it seems like they're kind of waiting just to do that to the equity market, but who knows? I think maybe some other markets will clue us in.
A good recipe for a whole lot of nothing going forward. A lot of bulls, counterbalanced by a whole lot of bears lurking in the shadows, and then a lot of kind of, maybe once this Greek thing shakes out, not much else on the near-term horizon. Heading into, in a few months, into the teeth of the summer doldrums. We might be hanging out at these levels for quite some time. We could be talking about the 13.5 level in the S&P down in October for who knows on those shows going forward. Or Uncle Mike could be right, and we could be talking about the 1500 level, and Apple could be trading 5,010 by then. Who knows?
Yeah, I mean, and it kind of makes sense, if you think about it, how it coincides with what Mark was saying, that he thought maybe the VIX could move a little bit lower in the short term, and you're right. I mean, the market's kind of sitting at 1350 for weeks, months. That definitely would be doing what a lot of people don't think it's going to do. And
I don't know about you, but I'm just blasting.
Marks always like to do that.
I'm just blasting VIX straddles with both hands all day long. I'm not sure you guys are too, right? What can go wrong with that strategy? Non-stop ATM front month VIX straddles. I dare someone take the other side of that trade. All right. With that daring image in mind, we're going to close out this Around the Block segment, and also this episode of the Option Block. I want to thank my cohorts, my partners in crime, for joining me on the old all-star panel for this Thursday edition of the Option Block. And starting with you, Mr. Sebastian, what is coming up in the land of Slinky.com, aka OptionPit.com, that may interest and or intrigue our listeners? A little birdie told me there may be a webinar in your near future. Can you confirm or deny that, sir?
New York, March 24th, live and in person at the Street office, at the Street's boardroom, or via the web. You can catch myself and Russell Rhodes of the CBOE presenting how to trade the SPX like a professional. We're going to cover everything from all the different products that you can trade, how to trade them against each other, delta neutral trading, complex strategies. We're going to get into VIX versus SPX. You name it. VIX is an indicator. We're going to give you a top-down kind of buffet of great ideas on how to use the S&P 500 as a tradable asset within your portfolio. I think it's an absolute can't miss. Go to optionpit.com/events to check it out.
Is this an all-you-can-eat buffet or kind of a one-time up buffet?
Well, it's an extra $1 for the take-home plate.
Sounds like a deal.
Sebastian, don't do the snack bars. He does all you can eat when he talks the VIX, baby.
That's exactly right.
Or the SPX in this case. All right, thank you for that, Mark. And moving over now to the land of St. Charles, Illinois. What is coming up in the land of KYO aside from that big cigar lighting party that may interest and or intrigue our listeners?
Next week's going to be a busy week for us. On Tuesday afternoon at noon Central Time, I'll be on the Options Express webinar network. I don't know if that's what they call it. In fact, I think it's not, but I like to call it that anyway. I'll be guest speaking with my good friend, Jim Roseanne. I'll be talking about strike price selection. So for more information on that, feel free to go to the Options Express website in the Educate section. And then on Wednesday night at 8:30, we haven't even promoted this as of yet. We're going to send out a big email on Monday afternoon. We're going to be having our first annual monthly KYO webinar. The title of the webinar is going to be Trust. And I'm going to be talking about a lot of things in that webinar, and I'm really excited about it, just to kind of unveil to everyone a lot of what the evolution of what Know Your Options has come about over the last few months in terms of merging with an institutional firm, in terms of just the overall financial picture and the importance of doing the right thing, not only with managing risk. Don't get me wrong, you have to manage risk, but by making sure that the overall financial picture is being handled in the right way. So we'll be talking about how that can work along with using options for the longer term portfolio.
An interesting shift to the old regular webinars, talking a little bit about the home front and all the interesting changes that have gone on over in KYO/SGC land during the past few months. I'm sure that'll be very interesting. I wouldn't mind tuning into that myself if I wasn't traveling all of next week. And last but certainly not least, Big Tim Navabi holding down the fort over in OX land. What is coming up in the land of OX, or as Uncle Mike likes to refer to it, the Options Express webinar network in our near future?
Well, I didn't get any webinar information today because if I finally thought, you know what, I'm going to read off these list of workshops, these free workshops that we have. I get them in the email, and we always have a list of these. So, you can always call up and say, hey, are there any workshops in my area? Sometimes they're on the site. Sometimes they're just kind of coming up a little quicker than that. We're going to be in Phoenix on March 24th from 8 o'clock to 3:30, 8 a.m. to 3:30 p.m., of course. Arizona Grand Resort, that's in Phoenix. Again, Saturday, March 24th. April 28th, we just added this one. It's a San Antonio workshop, also from 8 a.m. until 3:30 p.m. And then, oops, I apologize there. That'll be at the Westin in San Antonio. The Arizona one, that will be at the Arizona Grand Resort. Apologize for that.
All right. Thank you for that, Mr. Navabi. And, of course, for more information on all of the topics we discussed on the show today, such as the breaking news, the unusual activity, the other shows on our radio network, more information on roles, whatever the case may be, then surf on over to theoptionsinsider.com. I don't mention this enough on the show, but I probably should. By all means, if you like the show, then surf on into iTunes or wherever your podcast downloading system of choice is and give us a nice rating, a nice 5-star rating if you like the show on Apple, on iTunes. Leave us a little comment. If you don't like the show, if you can't stand Tim Navabi, whatever the case may be, then by all means, don't leave us a rating. But if you like the show, you like what we bring to you on a regular basis, and by all means, surf on into the iTunes store and leave us a nice rating there. It certainly would go appreciated by all of us on the old Option Block All-Star panel. And that is going to do it for the show today. We, of course, want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And we'll see you all next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.